Everyone doing today? Welcome to today's session. Today I'm going to be talking about the best trades of 2023 and my 2024 outlook. How is everybody doing this afternoon? So at the end of the year, I find it to be important to go over what kind of trades worked for you in the prior year, figure out which kind of tickers worked, which kind of tickers did not work, and then use that information in the following year so that you can work on continually improving your trading, right? So, what I always like to do is I always like to rank not just trades because trades are one thing, but I find it most important to rank actual tickers. The way that I typically trade is I'm going to be trading options. I'm going to be focusing on relative strength and relative weakness areas of the market. And then I'm going to be continually trading the same areas over and over and over again. So it's not necessarily, one trade that made the year or anything like that. It's a rinse and repeat process. In which I'm trading the same tickers with the same setups. And that is really what makes the biggest difference. So instead of just talking about, three big trades, I'm going to talk about basically the seven major themes. So when I'm looking at last year, first of all, we had a couple major setups. The number one setup right here was this weekly squeeze in the NASDAQ. This is actually right when I went on maternity leave. So this is at the end of 2022. And then at the beginning of 2023, I mean, we were still just in this massive squeeze firing in the NASDAQ. So when you have a consolidation signal like this on a weekly time frame in a key index, what that's going to do is that is going to cause upwards price action for weeks on end, and that is a major signal that I like to identify and follow. And then what I like to do is I like to identify the top tickers within that space and trade those. So this signal was consolidating from, let's see if we can get exact dates on here. So this was all the way, back in December of 2022. And then we ended up seeing, we had upwards price momentum even before the signal completely fired. The signal fires when these dots go from white to red to green. That's technically when it fires, technically when it breaks out. You can see upwards volume buying and upwards momentum really starting at the lows in October, and then again, throughout the Santa rally timeframe, January timeframe, and that typically does get even stronger surrounding earnings. So I like to trade a lot of earnings as well. I like to trade moves going into earnings. So when you see a boost going into the new year, that is typically a time frame I like to trade. In that instance, I was on maternity leave. I was trading it during that time frame, not a whole lot, but I was trading a little bit because I couldn't resist. And then this time frame right here was great. April, this is a rally going into earnings season. And then subsequently, we had a post earnings season rally. We did not get sell in May, go away. But instead, we got a squeeze firing in the NASDAQ. So this really led to a lot of the setups that I had. Once we got into July and August, the market wasn't really moving in a directional manner. You can see that there was a lot of consolidation here. And so what I was doing during that time frame is I was primarily trading earnings. Then we had another weekly squeeze in the NASDAQ with another, big move higher. So when I look at last year and I see, the majority of what primarily I was focused on those larger moves and focused on really the top stocks in that space. So Apple was a big Apple is one that, if you look at the overall weekly chart patterns, and you go back and you say, okay, well, was this moving along with the NASDAQ? Certainly, it had a bit of trouble in 2022 with the bear market. But once we got into 2023, I mean, we had some really nice movement with Apple to the upside, weekly squeeze. It did, get a little bit lackluster throughout this time frame where we pulled back again. But you have to remember when you pull back, and if you pull back and you consolidate into another squeeze, all it does is just another moment in time um, where you can trade another big rally. So Apple, looking back at the chart and saying, okay, Apple is my number one ticker last year. You know, what was the thing about it? What was the big setup? What was the big trade? Um, it wasn't one trade. It was, lots of trades over and over again. Apple, one reason why I like to trade it is because, especially in the beginning of the year, nice trend. So what I like to do is I like to identify trends and I like to ride them. Anytime you have something that has neatly stacked moving averages and you're continually, pulling back into support and bouncing, that makes it a pretty simple trend to ride. My favorite strategy that I like to use is going to be butterflies. And so with Apple, Apple is a typical ticker where I like to trade a lot of butterflies on it. So I'm just continually looking at, technical analysis and recent setups, and I'm looking at different places where I can place a butterfly. And then, also was trading stock on it as well last year. So when you're looking at stock, just riding it up throughout this time, start selling some off as it did pulling hard. Um, and, and then, now at this point, I'm really just focused on using my butterfly strategy. I also did trade some earnings reports on Apple. I don't normally trade a lot of earnings reports on Apple in particular, but I did trade a couple earnings on this as well. So, the main thing with Apple is a lot of the time the stock will rally post earnings. So, you can see that it had a pretty big post earnings rally that quarter. The quarter before that, it did not, had, massive gap down. So that was not a post earnings rally quarter. But the quarter before that and the quarter before that is those are other trade setups that I like to use in Apple that are typically pretty good in this name. Now, looking at what Apple's doing right here now, it's not a good start to January, not a good start to 2024. I think that this is the biggest canary in the coal mine at this point because, I really like these squeeze setups. This is a squeeze right here, and it was consolidating right near this previous high. And I would have loved to see it break out to the upside, but it didn't. Had a major gap down during the Santa rally timeframe, during what's supposed to be the bullish time where we typically have higher going into earnings. Those things did not happen. So at this point, my outlook for this stock is, I've edged out of most of my long shares. Just going to be a trading candidate for me, either direction. I don't really care like which direction it goes. I do think it's easier to trend. The trend has been up, but at this point, you can see that it's shifted into a downward trend on the lower time frame. So the most recent trade I was discussing in the options gold was using a butterfly to target 180. It's already made that price target, so at the point I don't have a trade on it. The key line in the sand here is going to be 180. So if it breaks down below 180, that would be a potential short, but the 200 simple is a pretty critical area of support. So I'm not going to, throw a lot of money or anything on it breaking that zone, especially because it's pretty oversold. As far as the weekly time frame on this stock is concerned, you're still in a bullish trend. So even though the daily chart doesn't look great. Um, it's just one of those things where the weekly chart pattern still is strong. And the monthly chart pattern, what's interesting about it is it has a monthly squeeze. So I think that it got a little bit toppy around the $200 price point. I think that that's, typical for a stock like this to find some resistance at such a big key psychological value. But I don't think the move here is totally done. I just think that, in the shorter term, we can, look at a few bearish trades, but ultimately looking for this to continue higher. So with Apple, one of the main reasons why I like to trade this stock so much is it has a lot of volume and open interest, especially using my strategy surrounding butterflies. So what I really like to do is I like to look at the expected move. In this case, for example, going into the monthly series, it has an expected move of $6.32. And then if you look at, where's your high open interest? You've got high open interest here at 180, but you've already made it to that target. You have high interest at 185, and then up here at 190. So I like to overlap those targets with some option strategies, and that's that I like to trade it. So one of the ways, whereas Apple is top making money making ticker for me in one of my options accounts that I like to use last year. Combination of stocks and options. And those are the main setups that I was looking at. Now, number two was Microsoft. Microsoft is one of my top portfolio picks in my long-term stock portfolio, and then also in my options accounts. So this was the number two moneymaker. Now, again, like Apple, it's not just, one trade that makes the year. It really never should be, at least in my opinion. Like, it's just not how I trade. I try to, regularly make wins instead of like, like a lotto trade win that just makes your whole year, because it's just not, I mean, that's not what makes like a day-to-day lifestyle, a day-to-day trading career. Um, Even though the one hit wonders are surely, it's just not the same. So the way that I trade, I'm going for those consistent moves. Obviously, in the stock market, nothing is ever going to be fully consistent. So on one hand, I do hate that. But when I say consistent, what I mean is that I'm trying to, trade it over and over and over and over again. Sometimes I'm going to be wrong, obviously, but that's what I'm going for, one hit wonder. So if you look at Microsoft last year and see the way that the trend was, there were a couple main signals that helped out with this. We had this weekly squeeze, just like we had it in the NASDAQ, and then we had another weekly squeeze right here. So this was a huge move that I was able to follow in Microsoft, buying some stock, selling some stock, also just trading it using butterflies. And then I also really like to trade the earnings reports as well. So generally, if you can align um, a bullish, like a weekly squeeze, plus an earnings report, that will give you a variety of setups. So you can trade the stock going into earnings, and you can also trade it after earnings. That can be, an event that you can use to get entries and exits. And then, the same thing goes for this weekly squeeze as well. So this weekly squeeze occurred, we're pretty flat during this time frame. Whenever a stock pretty flat like that, that's a moment in time where you can get into longer term stock positions, and you can also build up directional options positions for when the thing takes off. So those were primarily the signals that I used in Microsoft. I think that this one was really, really good. This was an earnings report. It gapped up, it pulled back, it hit the 50 simple. Anytime you have a stock that pulls back and hits the 50 simple and then rallies like that, it's a really good sign, along with that daily squeeze. So that was a really good signal. I think that this one was the best one and also the easiest. I mean, the first half of the year when we had this really nice trend was certainly, I think, the easiest move to trade as a trader because, you have a nice trend. It's relatively simple to continually place butterflies. And then anytime you get a squeeze and an earnings report, that's going to make for some pretty good moves as well. So this one right here, this move going into earnings, this rally and excitement before earnings. Then I also traded this post right here. We had a, you know, big gap up after earnings, high volume gap, and just continued on, right? So that was another a big move from last year. As far as my outlook on this stock at this point, I've been trying to trade this one with this consolidation pattern right here. Hasn't been working out for me quite yet, just because I've been stuck in consolidation for over a month now at this point. So anytime you're in a directional trade and it's not moving, it is going to be not very beneficial for your options contracts because your options contracts are going to start to lose with data decay. So this one has been a little bit challenging so far, but the setup's still there. We have earnings coming up. This is a setup that I do, like I said, like every quarter. There are some quarters where it doesn't work. I would be a little surprised if it did this quarter just because it's the beginning of the year. January is typically pretty good for this kind of setup. But it happens. Doesn't work every quarter. So with this one, currently I'm targeting 380 and then 390. So we'll see if it ends up coming through. But basically, like I said, I like to use butterflies. So the reason why I use butterflies is because it's going to be the lowest risk, highest reward trade. And then also they really allow me to sit through a lot of this. I have just long calls, you're going to get killed when the market's not moving. At least with butterflies, you have a multi-leg option strategy where, for example, if you have like a 365 call, 380, 395, something like that, where you're long these calls and then short calls and long these calls, that's what creates a butterfly. You at least have some short calls here that are benefiting from some theta decay. So when the market's not moving, the butterfly can be somewhat stable. But it will, as you get closer to expiration on those options contracts, it will start to lose value if the stock doesn't move. So in that case, you generally just have to push out your butterflies another week or two. Or, if this setup doesn't work at all, and if it, breaks to the downside, well, then I'll take a loss on it. But I think ultimately, Microsoft for this year, I think that my biggest concern with it is it's had such a big move. It had a great year last year. The monthly squeeze is already fired. So, how much more upside have? I do think we could trade it up into 400, maybe 450. So I do there's still a bit of upside left there. But I am a little concerned with like Microsoft and Apple getting so toppy at this point, just because they've gotten a little bit stagnant after making such big moves. Either way, definitely going to continue trading Apple and Microsoft. Now, the next one on my list for my top tickers for last year was actually the SPX. So I think this one was kind of funny because everybody started jumping onto this day trading the SPX craze like a couple of years ago, and I was super resistant to it because I don't like to day trade. I day traded like the first 2 years when I first started trading, and I just didn't like it. I just found it to be stressful, and I just, at the time I had a newborn. Then this year I had another newborn, so um, it's hard to day trade when you're, getting interrupted by a baby. So there's that, but also because I like to do a lot of media, and you can't really be managing day trades when you're getting ready for a show, that kind of thing. But what's interesting about this is I've always loved trading the close. So no matter what I'm doing, kids, media, whatever, I'm always protecting like the opening session and then the close. So that is, my time to trade. Nobody's interrupting me. That's where I have my focus. That's where I also have a lot of opportunity because the market's generally making some pretty good moves at the open and close. Now, I used to trade S&P futures at close. Um, at one point, I had cashed out that account when I bought my last house as part of the down payment on it. And that was back in 2020. And at that time, uh, trading futures was awesome because the market was really volatile. Um, I thought about getting back to it again. I probably should, but what's interesting is I started using my futures setup to day trade the SPX at the end of the day. So this actually ended up being my top 3 ticker from last year, and it's kind of surprising to me because it was something that I just didn't really want to do for a long time, and then last year I just decided to take a stab at it. So I think I'm going to be doing more of that this year. I think the best thing about those trades is that, pretty short. It's like 30 minutes a day. Yesterday had a good one. Yesterday the market was breaking down. So I just ended up shorting, right at the end of the day here. And you can see the way that the volume just boom rolled off a cliff and broke down. So, those can be beneficial. You do need the market to be moving. So when it's choppy and flat, it's not going to, it's just not going to do much anything for you. So, these Fed days, any day where the market's going up or down, can go up, can go down, but need some major buying and selling action. To do that, I'm really looking at want to see, what is the buying pressure? What is the selling pressure? If we have strong selling pressure, like down here, you can see that there's ticks between -600 and -1,000. That is a moment in time where I'm going to look at putting on a potential short. We had some other market internals yesterday, like the vol spread. It was just rolling off a cliff. That's just volume selling coming through. We also had the put call ratio that was spiking pretty high yesterday. So those are all signals that it's a good time to short. So with the SPX, it's not even like I never call like a yearly target or anything like that because I like to trade the index from one decision to the next. Um, and when you're looking at this, you can look at it in 2 different ways. You can look at it on a long-term basis. I mean, I do still think the SPX is going to trade up into 5,200 and ultimately up into 5,500. As far as like when it's going to be there, I don't try to make any of those kind of predictions because I'm trading the individual setups on the chart. So, for example, we had this last weekly squeeze. That hit targets. At this point, it's pulling back. So my main focus with this index right now is that, it's pulling back. How far is it going to pull back? Right now, it's pulled back into the 21 EMA. So if it can't hold there, which it's doing a decent job holding right at 4,700. If it can't hold there, then the next target is going to be around 4,650 or so. But we're just gonna have to see. Right now it's holding up all right. But with this strategy, I'm really just using butterflies at the end of the day. Yesterday, the butterfly that I had on was let's see which one this was. It was a $10 wide butterfly targeting 4,700. So anytime you target like 4,700, key psychological value in the indexes, that tends to be pretty good use of trading the SPX. So, I don't know. Let's see what moves looking like today. It's way too early into the day right now to look at any kind of specific trade on this. But generally, what I'm going to do is I'm going to look at the buying and selling pressure the last half an hour, 45 minutes of the day. And then I want to look at what the expected move is. In this case, it's about $11. So, using 4,700 as a target makes sense as long as there's some selling pressure. So, I could set it up like this where I'm just doing, okay, butterfly. Let's see, position that I have. Okay, so if we do like 4710, 4700, 4690, something like that, you're only paying $2 a contract. And then at that point, you are, you're getting into a situation where you have a pretty good risk to reward scenario. So, you're risking like $400 if you do 2 contracts, 1,600 is your max profit. So, you have about a 1-to-4 risk reward ratio, which is what I really like with these kind of trades. And then, just day trade it at the end of the day like that. So the idea would be that you're trading at 47.10 right now and you're buying a 47.10 put because you want that to go up in value as the market falls into your target at 4,700. This leg down here is just a protective leg so that you're not short too many contracts at the 4,700 strike price. So the goal is, make money on the 47.10 put as it falls into 4,700, and then your debit can go higher and higher, ideally. So those are going to be my top 3 tickers from last year. As far as looking at, the outlook for this year, I think that overwhelmingly we have a lot of reasons to be excited about this year. The NASDAQ starting like this at the beginning of the year isn't my favorite way to start off the year. Generally, we like to see a nice Santa rally at the end of the year and the beginning of January. And then we also like to see a nice move going into earnings in the beginning of January. Those are all things I normally look for, normally trade. In the instance, I just feel like the market already had the big rally before the Santa rally timeframe appeared. So I'm going to give it a little bit of an excuse, I guess, this year. Just to me, like Santa came early. So I'm not, I don't want to like start off the year on a bearish tone just because we got a pullback here. I'm still really positive about this year overall. It's an election year. The 10-year has been on a downhill slide, and that has resulted in interest rates continuing to go lower. Yes, we have had, just a little bit of a spike in it over the course of the last week. It's still underneath a lot of critical resistance. You're still in an overall downtrend. So that's typically positive for tech stocks and the stock market. We also have quite a few stocks that did well for earnings last year. And I think that they, can continue, especially going into earnings this year. So, we have Meta coming up, really nice pullback. That one looks like it's a good setup for a buy here. Amazon, definitely pulling back like everything else, but it's holding the 50 simple, and Amazon's done pretty well with earnings recently. So I want to focus on stocks that have been reacting well to earnings. And then at that point, see if we can trade some of these before earnings, over the earnings report, after earnings. Those are pretty good catalysts for these kind of stocks. The jury's still out on Apple, but I think ultimately, more than anything, what I like to do is I just like to focus on main setups that I use over and over and over again with the main tickers that I like to use, over and over and over again. Tesla is another one of those. You've got a daily squeeze on Tesla right now. You have an earnings report coming up soon. So I just like to rinse and repeat the main themes and the main setups, and then I like to trade those tickers basis. As far as the buying or selling pressure is concerned, so that's going to be the ticks. So I do have a grid I can give you where you can actually just copy, you can have this exact same Thinkorswim grid, but this is just the NYSE tick. So in Thinkorswim, you just put a $ TICK. And I actually drew these lines on here, plus 600, plus 1,000, negative 600, negative 1,000. So those lines aren't on there. But what you're looking for is for the ticks to go down and remain below negative 600 or go up and remain above positive 600. Not just like a little spike that rolls over, but a constant, you know, slamming into this region. That tells you that you have more selling pressure than buying pressure. And that is a moment in time where you can look for a day trade. So that's also, you can combine it with other things like the VIX going higher or lower. The put call ratio is a pretty good one because the thing is that the put call ratio will start spiking when people are bearish and getting short. So, in this instance, yesterday, the put call ratio, and this is, free too. This is just $ P call. When the put call ratio is spiking like that, that's because people are getting short. So that again can be just another good one to use as far as like a directional day trade. So as far as everything else is concerned, I know it's been like a kind of a crazy start at the beginning of the year, but the year is still young and volatility is not the worst thing either. We had a situation with the VIX where the VIX was at extreme lows, it's all the way down 11. So I think it's fine and normal for it to spike a bit. It's not, back up at 18. It's not up at 20. It's just up at 13. So it's still pretty low. But yet we're getting some tradable moves. So this is, my overview from last year. The main theme here is just do what works. We didn't even talk about what didn't work, but I think that would require a full second overview. Main things that don't work in general are just not taking stops soon enough. That's one main thing. There's always going to be like a few setups that just don't work, period, like it fires the wrong way or something like that. But I can look back and say, okay, I probably should have taken a stop sooner on something like that. So overall, I think last year was pretty decent, considering a lot of the craziness, just in the market, and then I don't know, in my life as well. Coming back from maternity leave was a bit of a transition, but I think things went pretty well. So if you have any questions, let me know. I'm going to get that grid and I'm going to share it for you. Other than that, thank you so much for joining. I hope you have a great rest of your day, and I will see you next time.